He is the author of the recently published The Myth of Democracy and the Rule of the Banks. He is also a PSL leader and is a frequent contributor to Liberation News. He will talk about his new pamphlet and discuss the importance of the revolutionary struggle in the U.S. So please welcome Richard.
Thank you. It's nice to see everyone. I'm sure you've all been excited by Mitt Romney's words this week. We wrote this pamphlet, and many people worked on this. I'm the person who wrote it, but many people worked on the layout and the cover and the copy editing, proofreading, and all the production. What we try to do with it is make it something that's accessible. You know, a lot of times as soon as you bring up the term economics, people's eyes start to glaze over, because really, it's not that economics is really so hard to understand. It's that we have been taught, all of us are taught, that it's something for somebody else to think about. Somebody, other people can understand it, but we can't. The average person just can't understand it and don't even try. And so you get all this terminology that is really like just a bunch of gobbledygook. And so what I tried to do with the pamphlet was make it something that talks about the current economic crisis in a way that the average person who wants to know something about this can pick it up and read it. We also have other resources along the same line. I don't know how many people here see the Vote PSL or PSLweb.org website. Some people do, yeah. So I don't know if you saw the statements that we had from our campaign this week about Romney saying that 47% of the population, in one of the most insulting and actually stupid political speeches of all time, I think. He apparently didn't know he was being videotaped, but who can really think in this day and age that they're not? Am I being videotaped? Yes. Yeah. I mean, everybody has to assume that, and yet what he revealed was the real attitude of the ruling elite toward us.
Truly. That's
what they really think about us, And he's talking about people like half the population of the United States who's just, and you're not really supposed to do this in political speeches, to act like they're all hopelessly lazy, good-for-nothings, which is basically what his statement said, and he wasn't going to be able to win them over and so forth. So we had a statement about this that was titled, our campaign, From Pay to Lindsay, that Romney's disgusted that 146 million people think they're entitled to eat. Because he said that. He said they believe they're entitled to health care, to food, to housing, to you name it. What do you mean, you name it? Aren't people really, shouldn't people be entitled to eat? And then, we have another statement that came out the next day, and I would urge people, if you haven't seen these, to go check them out, where this author, who is really a conservative guy, he thinks the market economy is being destroyed, and he's written several books about it, being destroyed by too much subsidies to the corporations and to the banks and so forth. But he did this he's a very good investigative reporter, and he found out that 19 states in the United States have a deal that in order to either be kept in the state or to be induced to move into a state, that the state agrees to give them all of the state income tax that's withheld from the workers that they employ. I mean, seriously, I'm not making this up. That the government, the workers all think they're paying their state income tax, but the state is giving exactly that amount of money right back to the company every year. And if you don't have enough withheld from your check, so like at the end of the year you got to write a check for $200, to make up your state tax, they get that too. They get it all. And so when Romney said the other day, the 47% who are dependent upon government, we asked the question in the statement, is he talking about General Electric and Ford and Chrysler and Motorola, et cetera, who all share in this? The biggest corporations are the ones who get it. And by the way, Walmart and Lowe's and a lot of other corporations and this is also included in the statement, get back either all or a large part of the sales tax that they collect, supposedly so for building renovations and so on. I mean, it's unbelievable, and I'm talking about things that go beyond the scope of what the pamphlet. But I want to talk a little bit also about the pamphlet. But I would urge everyone to follow these, the Vote PSL web and the votepsl.org and PSLweb.org website, PSLweb.org websites, because this kind of information, you're not going to find it somewhere else. And you know, one of the reasons that we work so hard to get on the ballot, and we're not on the ballot in California, but in 13 states we are, is that so we could have a shot at bringing this information and analysis to people who aren't going to get it, mostly otherwise. So the pamphlet is called, as Yvonne said, The Myth of Democracy and the Rule of the Banks. You know, and in 2008, I think many people here know that in 2008, there was the biggest bailout, bank bailout in history. It wasn't the first bailout by any means, but it was the biggest one. And the banks got $700 billion, and they got trillions of dollars in loan guarantees to back that up. It wasn't just the money that they received. And both Bush, who was president at the time, and then Obama, who was a candidate and then became president, supported this. And I remember very clearly Obama, the candidate, in 2008 was asked, well, do you think some conditions should be placed on the banks who are going to get the money? And he said, no, that would slow down the process too much. Conditions meaning that they had to give some break to millions of people who were being foreclosed and losing their homes. And he said, no, that would slow things down. So a couple months after they got the money in October, the first round of it, in October 2008. And then a couple months later, a reporter from Associated Press named Matt Apuzzo called all the banks that had received bailout money, and he asked them a question: what did you do with the money? And here's a few of the responses. Thomas Kelly, JP Morgan Chase: we have not disclosed that to the public, we're declining to. They got $25 billion. Bank of New York Mellon got $3 billion. Their representative: we're choosing not to disclose that. Carissa Ramirez from Morgan Stanley, they got $10 billion. We're going to decline to comment on your story. And that's how it went right down the line. All of the 80 banks, all of them said, we decline to comment. Well, that's not surprising that they wouldn't want to say what they did with the money, because we all found out what they did with the money. They, nothing good except for them. But what's really amazing about that is that in the legislation that passed Congress on its second time around, there was no requirement for them to have to say what they did with the money. Has anybody here ever gotten a government grant or been part of a nonprofit that got a government grant? You know, if you don't, you have to tell them what you did with every penny. If you don't, they come and get the money back. They demand that you give it back to them. And that's if you get like, $5,000 or $1,000 or $10,000. But these people got $700 billion, and there's no requirement for them to say what they did with the money. And I think that one of the points that we make in the pamphlet, that what this shows is that while the government rules over the people with its apparatus of repression, the police, the courts, the prisons, the biggest prison system in the world, by far. We're supposed to be the most democratic country. Does most democratic mean most people in prison? Do those things really equate? But there's that government that rules over the people, but the banks rule over that government. They really rule. And what did the banks do with the money? What did they actually do with it? Well, they sat on it or gave it to their executives in the form of bonuses. That next year, after they got the money, 5,000 Wall Street executives got bonuses of at least $1 million. No wonder they didn't want to talk about where the money went. Well, what caused the economic crisis? Because we saw the fall of some of the biggest names in 2008 on Wall Street, the collapse of Lehman Brothers and Merrill Lynch and Countrywide Finance. It propelled forward this economic crisis that was already underway, that was already developing. And what caused the economic crisis that we're still living in, the worst one since the Great Depression? And I want to quote a little bit that Frederick Engels, who was Karl Marx's closest collaborator, wrote back in 1877. That's 135 years ago. And he said, as a matter of fact, since 1825, when the first general crisis broke out, the whole industrial and commercial world, production and exchange, are thrown out of joint about once every 10 years. Commerce is at a standstill. The markets are glutted. Products accumulate. They're unsellable. Hard cash disappears. Credit vanishes. Factories are closed. And the mass of workers are in the want of the means of subsistence. And this is what's very important, because they have produced too much of the means of subsistence. The stagnation lasts for years. Productive forces and products are wasted and destroyed wholesale until the accumulated mass of commodities finally filter off, and production and exchange gradually begin to move again. Little by little, the pace quickens. It becomes a trot. The trot breaks into a canter and into a headlong gallop. And finally, after breakneck leaps, it ends where it begins, in the ditch of a crisis. And this is what's recurrent, the boom and bust cycle of capitalism, over and over and over again. And I want to follow that up by the miner's riddle. And I don't know if people have ever heard this one, but it goes like this. It came from the time of the Great Depression. It's a coal miner and his daughter. And the daughter's saying, "Daddy, why is it so cold in our house this winter?" And the father says, "Because we don't have any money to buy coal." "Why don't we have any money?" "Because I was laid off from my job at the coal mine." "Why did the coal mine lay you off?" "Because we produced too much coal." So this is something about capitalism that makes it different than any other system that has ever existed in the million years that human beings or so, or whatever the exact number you want to give. Capitalism has only been the dominant world system for the last 250, 300 years. It started a little earlier, but it occupies only a very tiny fraction of the existence of humans. And it has this particular weird thing about it that is absurd, but I would say criminally absurd, is that in all previous stages of human development, what brought about a crisis was that there was too little, right? Scarcity, and particularly scarcity of food. And brought about, whether it was by pestilence, locusts, or famine, or floods, or whatever the reason, or wars, whatever the reason was, the cause was, the cause of the crisis was scarcity. But under capitalism, what causes the economic crisis is that too much is produced. It's called capitalist overproduction. But there's a big asterisk next to the word capitalist overproduction, and that is not too much produced to meet the needs of people, but too much is produced to be sold in the capitalist marketplace at what the capitalists consider to be an adequate profit. And when that happens, people begin to lose their jobs. And for this crisis, we could substitute in the miner's riddle for the word coal, houses. That there was an enormous boom of house building that took place in the early 2000s, and that the banks, in order to maximize their profits, did things that made this crisis, that accelerated this crisis and made it much deeper and much worse. The fundamental cause of this crisis, the economic crisis, is overproduction, not only of houses but of many things. Too much produced to be sold at an adequate profit in the world market. But what the banks did, and we talk about this in the pamphlet, how they made the crisis so much deeper, so much worse, so much more protracted. There's a new term that came into being in recent years for people who sell mortgages. and that was called mortgage originators. And I want to say a little bit about why this is important. You know, there used to be a saying that for banks that sold mortgages, these banks would sell. They said about the bankers of a previous period that they observed the 363 rule. And the 363 rule was take in deposits and pay 3% interest, which none of them do now, of course. Make loans at 6% interest, and be on the golf course by 3 p.m. It was not a fast-moving business. There was a division between what were the commercial banks that did most of the mortgage lending and investment banks that made the big bets, you know, that bet the money. And the difference, those two were separated by a law passed in the Great Depression called the Glass-Steagall Act. And in 1999, the Republicans and Bill Clinton together repealed that law and took down that barrier that existed. When there was that kind of banking, mortgages were sold that way, it was no great deal for people. It was not. I mean, you generally, if you got a 20-year mortgage, you paid twice as much as the face value of the house by the time you were done paying all the interest. The banks made out well, they made a lot of money. But the banks had an interest in whether or not you would pay off your loan, right? I mean, they had the mortgage. Well, now that's not the way it's done. The greater part of the mortgages were being sold by companies that contracted with you to get the mortgage. You got the mortgage. They got paid fees that everybody gets. You know, you get charged all these fees when you take out a mortgage. And then they immediately sold the mortgage to a big Wall Street bank, which chopped up these mortgages, put them back together, and sold them as bonds to investors, and with the interest to be paid from the mortgage payments from a lot of different people to do this. So what it meant was that the people who were selling the mortgages, the so-called mortgage originators, didn't really care what happened. And in fact, they began doing all these tricks that have been now exposed. None of them have been criminally prosecuted, or very few, but all these things to make sure that people could get mortgages, even if it looked impossible for them ever to be able to pay, because that they'd ever be able to sustain the mortgage, because they would get their fees, they'd sell it to somebody else, they would tell some investor, oh, this stuff is all great, you know, buy it, it's really great, we're buying it too. They, you know, and some of them did and went bankrupt, but a lot of them were just lying about that. So, and so this had a whole different implication for the system. And the other thing, one of the other things that was happening was that they were talking people into buying subprime loans. And subprime loan means that at the beginning of your payment, for maybe the first 3 years, you pay at a relatively low rate, like maybe 4%, 5%, 6% interest. But after 3 or 4 years, it balloons, so it doubles in many cases, the interest payment. And how they got people to go for this, and many times they did it to people who were perfectly capable of getting just the regular loan, but they got a bonus if they could sell a subprime loan, because in the long run that would pay off a lot more. So there was a lot of fraud, a huge volume of fraud that was going on, of the of falsification of applications, of the promotion of this, and particularly promoting subprime loans, as it's been well documented, to African American and Latino communities. And then that they're clear. They're clear of the people who sold it at the beginning are clear of what of this issue of whether or not the mortgages are actually, anybody's actually going to pay for the mortgages. And the way they got people to buy the subprime loans was they said, look at the way the price of houses is going up. Just going up and up and up. And in many places in 3 or 4 years, 5 years, it doubled the price of houses. And so they said to people, look, do this. This is a great deal for you. When your balloon payment kicks in, your house will be worth so much more, you'll be able to refinance, meaning get a new loan, which the bank gets new fees for, lots of new fees. and you'll be able to make your new payments, and you'll have money left over. You'll be able to take a cruise, maybe buy a new car. You know, it's all going to be great. The only problem was that the price of houses didn't keep going up, because the price never keeps going up of any commodity, and particularly one that's going through a bubble like housing did. So the impact on people, and they talk a little bit about this, has been incredible and incredibly underreported in all of the media. I mean, what does it mean for people? Here were millions of people in the United States were losing their jobs and their homes at the same time. And along with that, in many cases, were also losing their health care and losing their pensions. And for many, many people, that meant they also lost their families, because there's nothing that's a greater predictor of the breakup of families than the loss of jobs and homes, the pressure that it puts on people. This is a story that gets covered a little bit now and then, but given the fact that it's affecting millions and millions, really tens of millions of families in the United States, not nearly the way that it should be. I want to talk a little bit about some of the other crimes of the banks. In March 2010, Wachovia Bank, which no longer exists, one of the many that fell, it was taken over by Wells Fargo, became part of Wells Fargo, admitted to having laundered, or they settled with the government, which is really constitutes an admission, that they had laundered $378 billion in drug money between 2004 and 2007 for Mexican drug cartels. 378 billion, not million, 378 billion. And these are the same drug cartels that have wreaked so much murder and misery on Mexico, leaving more than 40,000 people dead. Without the money laundering, these cartels cannot operate. Not at the level that they do. They have payrolls to pay. They wanted to buy big planes to be able to bring in larger shipments. You can't walk into Boeing in Seattle with a big bag or a couple bags full of $5 bills, crumpled up, and say, I'd like to buy a DC-10. That doesn't work. The money has to be laundered. So they did it. And of course, Wachovia made huge amounts of money. We don't know how much that they made in this. And did they know where the money was coming from, this river of dirty money coming from Mexico? Well, they certainly didn't think it was coming from Mexican workers and farmers, or even from any legal industry. And in a June 30th, 2010 Bloomberg News article, the federal lead prosecutor, Jeffrey Sloman, said, Wachovia's blatant disregard for our banking laws gave international cocaine cartels a virtual carte blanche to finance their operations. That was a quote. Martin Woods, who had been the director of Wachovia's anti-money laundering unit, and this is an important thing to know, this was the guy in charge of their anti-money laundering unit, so-called, quit the bank after Wachovia executives repeatedly ignored his documentation of drug dealers laundering funds through the bank. And he told Bloomberg, it's the banks laundering money for the cartels that finances the tragedy in Mexico. So, there's maybe half the people or more who are in U.S. prisons are there for drug offenses. That for selling $378 worth of crack cocaine, you can get 5 to 10. So these guys must have really got hit hard, right? Yeah. Not one day, not 1 hour in jail for any of them. The outcome of the case was that in 2010, the Justice Department settled with them and settled that they had to pay a fine. Wells Fargo had to now pay the fine because Wachovia was gone, of $100 million, $110 million, and with a penalty of $50 million. And then 1 year later, the Justice Department announced that the criminal investigation was closed.
No criminal prosecutions?
No criminal prosecutions. None. Here's the preying on the elderly. Very, very common practice. And if you have relatives or you yourself are elderly, they find out, as soon as you hit 65, you start getting calls. And a lot of older people who live alone and really are very atomized in this society, the most atomized society ever. Someone will call them and be friendly and talk to them in a nice way. They'll, very often get what they want, the person who's calling. Here's one example. A woman named Doris Canales, who was an African-American woman in her 70s, and this was in 2008, late 2008, sharing a home in Hackensack, New Jersey with several family members. She had purchased the house in 1999 with a monthly payment of $1,700 on a mortgage of $192,000. By late 2008, now suffering from serious health problems, including kidney failure and declining lucidity, according to a New York Times article, her monthly payment had soared to over $4,000, and the house was being foreclosed. How did this happen? Referring to the many cold calls from the bank she had received over the past several years, Ms. Canales told the New York Times, they just call and say, hey, do you need money in the bank? And I was like, yeah, I need money in the bank. Between 2002 and 2008, she refinanced 13 times with a wide range of banks, including Wells Fargo, Wachovia, IndyMac, Countrywide, and Chase. These were mostly no-doc transactions, as they're called, meaning there was no presentation of any documentation, nor was it asked for. So she received cash amounts in these transactions, these 13 transactions, that ranged from $2,000 to $10,000. The bank fees for each transaction ranged from $19,000 to $39,000. By 2008, her mortgage owed had nearly tripled to $544,000, while the market value of the house had dropped from a high of $619,000 to $480,000. She could no longer meet the mortgage payment nor refinance. And this is very widespread. Has been very, very widespread practice. And then there's preying on students. I mean, I think everyone here probably has heard that accumulated student debt has now surpassed credit card debt. It's over $1 trillion. And millions of former students, the average now is around 25,000 coming out of four-year degree, bachelor's degree, $25,000 in debt. But many people owe $50,000, $100,000 or more. And really face a lifetime or near lifetime of debt servitude, unless there's a revolution. Another reason to have a revolution, and particularly if you have student debt. But I want to read a quote here from some of the consequences that aren't talked about much of falling behind on student debt, which triggers very quick and very severe penalties and increases in the debt that's owed. And here's a statement from a man named Barmak Nassirian of the American Association of College Regulators and Admission Officers, quoted in August 2011. He said, "You will be hounded for life. They will garnish your wages. They will intercept your tax refunds. Professional licenses can be revoked and you become ineligible for federal employment. Unable to pay a key element of our society, our college-educated youths will find themselves swamped by late fees and interest piling up insurmountably. Relatives who co-sign for student loans, as is frequently the case, are also endangered financially. And people over the age of 60 collectively now owe over $36 billion in student debt. And since 1996, when the Debt Collection Improvement Act passed by the Republican Congress and signed by Democratic President Bill Clinton, had authorized the Treasury Department to collect money owed to the federal government by garnishing federal benefits and pay. This includes garnishing up to 15% of Social Security benefits for student loans. So this is all done, this legislation was done, for the banks. So again, I think what this shows is this immense power that the financial institutions have that really makes them the dominant power. And this is not actually a new revelation, but a more hidden one. In actuality, a man named V.I. Lenin, the leader of the Russian Revolution, wrote a pamphlet almost 100 years ago, in 1916, in the middle of World War I. And he said this, he called it, the name of the pamphlet is Imperialism, the Highest Stage of Capitalism. Still an extremely relevant one, talking about the stage of capitalism we still live in, this stage. And he says, as banking develops and becomes concentrated in a small number of establishments, the banks grow from modest middlemen into powerful monopolies, having at their command almost the whole of the money capital of all the capitalists and small businessmen, and also the larger part of the means of production and sources of raw materials in any one country and in a number of countries. This transformation of numerous modest middlemen into a handful of monopolists is one of the fundamental processes in the growth of capitalism into capitalist imperialism. And he said the economic essence of imperialism is monopoly capitalism, a financial oligarchy. An oligarchy really literally means the rule of the few, which throws a close net of relations and dependence over all economic and political institutions of contemporary capitalist society without exception. Such is the most striking manifestation of this monopoly. And I think that if we look, that phrase throws a net over all aspects, including politics, and particularly politics, that you can see why the political system is degenerated to the extent that it has, and what the role of the banks, who have been granted these unbelievable amounts of money with no conditions attached to them, what that indicates about their power. So the last thing I want to talk about is what our view is about this and what needs to be done. And this is also included. At the end is the PSL's program, a people's program to seize the banks. But there's many books that have now been written about this, and by people who know a lot about the banks and about the kind of criminal activity that's been going on. And they include people like Joseph Stiglitz, whose name you may have heard of. He used to be the chief economist of the World Bank. And there's another guy named Simon Johnson, who used to be the chief economist of the equally notorious International Monetary Fund. And there's an economist who's a professor at Princeton who writes for the New York Times called Paul Krugman. And then there's a guy named Robert Reich, who used to be the Secretary of Labor when Clinton was president, and who's become a real darling of liberaldom. I mean, he's on KPFA and KPFK all the time now, and others. And these people know a lot because they were on the inside. I mean, Reich, who's got this big image, was and still is a big supporter of NAFTA, which I think a lot of the people who hear him don't really know, and he doesn't want to talk about. And when it's brought up, he tries to duck it. But NAFTA, which has had such a devastating effect on particularly the people of Mexico, but also people in the United States as well, and Canada. But what they all say is basically the same thing. The Glass-Steagall Act should be brought back. The too big to fail banks, because that was the idea that the reason the U.S. had to bail out the banks in 2008 was they're too big to fail, because if they fail, the whole economy fails. There was another alternative there, which was nationalization of the banks. I mean, if you're going to put out all the money, shouldn't you get the return? But because the banks are dominant and the politicians are subservient to them, of course, that was considered to be a completely unacceptable idea. They want to separate commercial and investment banking. They want to limit the size of the big banks. They want more effective regulation. And they all have basically the same program. Here's an interview with Reich, Robert Reich, who we hear all the time, and I heard him in a Democracy Now! Interview with Amy Goodman, one of the many he's had, and he went through all the different things these things I just mentioned that they want to do. And then he finished his list by saying, we have to get the big money out of politics, otherwise everything else is hopeless. In other words, you can't do all these other things. Well, that's a nice idea, isn't it? You know, get the big money out of politics. Except the big money doesn't want to get out of politics. And as a matter of fact, the reason that all these things happen, Glass-Steagall, the deregulation, the hundreds of billions of dollars of bailout and all the guarantees and all that, is because they are dominated by that money. I mean, these are what our great so-called representatives, who don't represent us at all, spend most of their time thinking about, is how will they get the money for the next election? And how will they get the millions and millions of dollars they need? They're not going to get it from average working people. They have to curry the favor. So how does it work that you get the money out of politics? How does that happen? And does anybody see any signs that the money is getting out of politics? Or is the opposite happening? I mean, the Citizens United case, people may have heard of from early in 2011, where the Supreme Court ruled that the corporations really have all the same rights as people and can spend as much money as they want to. They can give as much money as they want to these political action committees. And of course, what's really ridiculous about that is some people will say they're against corporate personhood. Well, these aren't really persons. They're mega persons. I mean, compared to all the rest of us, their influence, is enormous. So how does that work? So you get to the point of like the nice ideas of things that might tame the system a little bit, but it's like, well, we don't have to you don't have to shoot the wolf that's coming after you. You can just hold it down and file its teeth. The problem is the wolf isn't interested in having its teeth filed. And it's the same thing with these. I mean, that's insulting to wolves, because wolves are just wolves. These are much more vicious characters who are running around. So, what we in the PSL say is that the answer is that the great agglomerations of wealth that are in the banks should be taken over. That the deposits of people should be guaranteed. But these great agglomerations of wealth, which in the process of the development of capitalism and its transition to imperialist monopoly capitalism, become more and more concentrated in the banks, that really represents the labor of humanity. Those bankers didn't make that money. They didn't earn. I mean, it's a joke when they say, oh, last year Mitt Romney only earned 14 million instead of the 21 million he was expecting. That was the news today. Well, he didn't. He didn't earn the 14 million. That great wealth really should be at the disposal of humankind, of the people who really created it. I mean, the whole process of capitalism is fundamentally, and of capitalist profit making, is fundamentally a process of theft. The owners do not pay the workers for the full value of what they produce. In fact, pay them really, in most cases, and I'm not talking about everybody or small business people who try to be fair, because I know there are some, but the overwhelming majority of people, of workers, work for corporations that exploit them. In fact, all of the capitalist process is a process of capitalist exploitation. It's not that there are exploitative corporations and non-exploitative ones. That's where profits come from. There's no other way that wealth is produced. One of the things that you should just say is that in the crisis of overproduction, one of the reasons that when the banks got all that money, they were supposed to loan it out and get the economy started. Instead, the economy just went way down, got much worse, is that in a crisis of overproduction, they're not going to invest their money in producing more goods that can't be sold in a kind of economic crisis. So a lot of what the banks have done is gone back to what they were doing before, is they're trying to make money off money. They're trying to transform the money, the capital they have, into greater capital without going through the labor process. And without going through the labor process means that they don't create no new wealth is created in that process. And so really what amounts to the giant casino, or casinos, the Wall Streets around the world, is a giant gambling operation that is essentially, in the end, a zero-sum out. That the losers will equal the winners in terms of the amounts of money that are won and lost. So this is really not, it's not just about the criminality of Wachovia, and Wachovia is not the only one by any means. All the big banks are doing money laundering. And Bank of America, they keep getting cited. And last year in December, there was an interesting article that I cited in the pamphlet where I think it was Citigroup had to go into court in New York, and they were going to make another deal, and they were going to say to the judge, we won't do it again, whatever they had done. And the article pointed out that 19 banks had, on 54 previous occasions in recent years, told the judge that they weren't going to do it again, and then they did it again. And the way that the whole system treats them is like, well, we'll settle with you for a fine. Please don't do it again. And then you have people in the government saying, well, we want to look to the future, not to the past. And they said this too, this is what Obama said about torture and the criminality, when he first came in, and the criminality of the Bush regime. Which is, try going into court and doing that yourself if you've been arrested. Judge, let's not think about the past. Let's look to a bright future. Well, this is going to keep going. This will keep going like this until the people stop it. That's the reality. That's the only thing that can stop it. It's not going to be the House. It's not going to be the Senate. It's not going to be the pitiful California legislature or anything like that. It's going to be the people. It's going to take the people rising up. And whether that happens sooner or later, we don't know. We hope it's sooner. But what we are dedicated to doing is building a movement that can be a movement for real justice. And real justice requires that the great wealth, the great resources of society be taken out of the hands of what is really a tiny group of bandits. And the economy restructured on a socialist basis to meet the needs of the people in a long-term sustainable way. And I should say, just the last point I'll make is just the sustainable. When we talk about global warming, when we hear about it and it gets, shunted off and so forth, well, that's not going to stop either until the people take over. Because all of these corporations, all of these banks are driven by one iron law, which is the real law of the land. And that is the law of maximization of profit. It's not just making a profit. They're all driven, and it's not based on whether they're bad, evil people in the CEO position. I mean, most of them are very reprehensible people, if not all. But if the head of ExxonMobil, which is for several quarters, makes and has made more money than any corporation in history, goes into the board of directors and says, the people out there are really hurting, and we make so much money we don't even know what to do with it. Maybe we should just cut the price of gas, $1 a gallon, and give everybody a break. And, his security would come and escort him out of the building, and there would be a line of 20 senior vice presidents who are waiting to take his place. It's the dynamic of the system itself. It's a vicious system internally as well, where they're all in a battle with each other to see who will survive. And many of them don't. You can just think of the names, and I come from Rochester, New York. Kodak is in bankruptcy. Once one of the biggest corporations in the world. AT&T really folded. Now it got brought back as a brand name. Wachovia is gone. Lehman Brothers is gone. Merrill Lynch is gone. Countrywide Finance is gone. Many automakers are gone. I mean, this is the life and death struggle of capitalism drives the capitalist, and they must seek to maximize profit. And the only answer to that in the long run, the only solution to that is to get rid of the system altogether. Thanks. And in addition to trying to make the pamphlet accessible, we made it pretty cheap too, so it's $4, so we hope you buy it. It's good ammunition for discussions with people.
Don't hardly seem right, that cop with his flashlight tapping my window and saying move on. I said, officer, see here, do you think that I'd be here if I had me my suburban home and a lawn? Now I'm just wasting away again in my coupe de ville, looking for a nice spot for the night. Some people claim that there's a banker to blame, and you know, they just might be right. I walked up to the teller and asked for the feller who sold me the home loan I couldn't afford. I asked, could he hold it? He laughed, said he sold it to some little Norwegian pension fund on a fjord. Now they're all wasting away again in their coupe de villes, looking for a safe spot for the night. Some people claim that there's some bankers to blame, and you know, they're probably right. Well, I moved in with Mama.
No.
Elected Obama. Watched the inaugural on CNN. But I flicked off that channel when his advisory panel was the very same bastards who just done me in. Now we're all wasting away again in our coupe de villes, begging for our next gallon of gas. Some people claim that there's some bankers to blame, and they're right. You can bet your ass